Ben Bernanke takes center stage today, how Wall Street is preparing for what the Fed chair is about to say. In today's cover story, inside the surprising politics of Yelp reviews. Plus, what's really behind the rise of the activist investor. And let the shopping season begin. Why Christmas is coming even earlier this year. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, everybody. It's Wednesday, September 18th. I'm Angela Miles. In today's first look, a buying blitz ahead of the Fed. The Dow is up for the third session in a row as the Federal Reserve gears up for its message to Wall Street. Tuesday, the blue chips rallied 35 points, the Nasdaq up 28, and the S&P 500 closed above 1,700. Gold fell $8, oil lost $1.11. Electronic Arts has named Andrew Wilson, a longtime insider at the company, as its new CEO. Officials are calling last week's fire along the Jersey Shore boardwalk an accident. And a new poll shows just 27% of U.S. adults pick the correct definition of quantitative easing. Larry Shover of SFG Alternatives joins us now. And Larry, what will you specifically be listening for with the Fed announcement today?
I think the most important thing is a zero interest rate policy pledge, and that's something that Bernanke is going to talk about for 2016. Right now, Fed funds rates are about 0.25%, and the market's expecting them to say by 2016, if the economy is healed, we're going to see 2.5%, maybe less in Fed fund rates. So I think that's key to listen to.
It's turning into an active week for software stocks. We had news on Microsoft yesterday, and Adobe came out with earnings after the close. Those look good, and plus Oracle reports tonight. What are you watching? What are you thinking here?
Yeah, what I'm thinking is that our economy is healing, no matter what you hear in the press. I mean, you see things what happened with Adobe last night and the Microsoft buyback. They think their stock's too cheap. I mean, they're doing well. I mean, we're taking baby steps. So I think it's an area that's been beaten down for a while, especially in the software. Maybe a time to start dabbling.
We are seeing a relaxing of oil futures. What do you think that's telling us, Larry?
Well, a lot of it, we've dropped, $4 in a week, and a lot of that is risk premium. Some of it is seasonal demand, and some of it is, we've heard just yesterday that Libya opened up its output. Overall, the trend is higher. We're just getting a little bit of a relief. Maybe we'll see 102, 103, but it's hard for me to believe that we get below $100 a barrel.
Thank you, Larry.
You're welcome.
The horrific shooting at the Washington Navy Yard is putting a new focus on safety in the workplace. 13 people were killed when a shooter let loose a barrage of bullets. It happened at a secure military facility near the Capitol. The gunman was a Navy reservist who was one of the first responders to the 9/11 attacks and soon after is said to have suffered from mental illness.
You could possibly have metal detectors in the workplace, which might seem a little bit extreme, but I think from a preventive end might actually save you some money and a lot of hassle down the road. Also have more maybe a do not enter list or restrictive presence or entrance sort of list so that people have to stay up front until they're personally okay to go back into some other area, or maybe some security guard escorts them back after a pat down or a metal detection check.
Krugel adds that employer background checks would reveal convictions but not arrests.
In Colorado, residents reeling from massive flooding now have a financial fallout. USA Today reports less than 25% of homeowners in the water-soaked area have flood insurance. In some sections, it's less than 10% who have proper coverage. The Colorado Springs Fire Department warns 10 years of flash floods may lie ahead due to last summer's wildfires that destroyed natural forest barriers.
The House is expected to vote today on reforms to the nation's food stamp program in the remaining half of the Farm Bill. The vote on the docket calls for cutting $40 billion from food stamps during the next 10 years. Supporters say they aim to curb abuse and waste within the program. As a challenge, the CEO of Panera Bread is living on food stamps, amounting to $4.50 per day to raise awareness. Ron Shaich blogs that the budget is leaving him very hungry.
To mark the second anniversary of Occupy Wall Street, hundreds of protesters took to the streets of New York yesterday to support the financial transactions tax. It's also known as the Robin Hood tax. It proposes a 50-cent tax for every $100 of specific kinds of financial transactions. The group has 200 million supporters, including Warren Buffett and Bill Gates.
New data from the Census Bureau contains some troubling news. 46.5 million Americans are living in poverty. Incomes dropped significantly during the Great Recession and are still 8% below levels in 2007. Earners in the top 5% have seen income gains of 67%.
The U.S. Department of Labor extends minimum wage and overtime protections to 2 million home health care workers. Starting in January of 2015, direct care workers will be covered by the Fair Labor Standards Act. Congressional Republicans argued against the change, saying it could mean a reduction in hours for these workers. The Obama administration says the move protects employees' rights to decent wages.
Holiday sales predictions aren't too merry as consumers remain cautious about their gift-giving budgets. ShopperTrack analysis projects holiday sales will rise 2.4% this year. That's down from 3% last year. Add to that, there's less time to shop between Black Friday and Christmas.
There are fewer shopping days this year, 31 last year compared to 25 this year. That will impact the consumer in that the promotions will start earlier, we think, and probably be more aggressive. So retailers have fewer days to prepare and make up for the whole year.
ShopperTrack also predicts more stores will be open on the Thanksgiving holiday this year and promotions will start earlier than usual.
The uptick in mortgage rates has not blunted the confidence of home builders. Confidence is at an 8-year high, according to the National Association of Home Builders. The latest monthly survey places the confidence number at 58. A number above 50 signals builders are optimistic. September survey results mark the 4th straight month of gains. However, the head of the Home Builders Association points out that tightened credit and shrinking supply of open lots could cool momentum.
Boeing's first test flight of its new 787-9 Dreamliner went off without a hitch yesterday. This latest version of the Dreamliner is 20 feet longer and can carry 40 more passengers than the 787-8 version. The successful flight could help Boeing work past the seemingly endless struggles of the 787-8 Dreamliner. Those problems culminated in a rare FAA emergency order that grounded the fleet in January to fix battery malfunctions. Boeing stock hit a record high yesterday.
In Europe, the auto industry has a bumpy road ahead. Despite recent strides in the Eurozone recovery, auto sales remain weak. New car registrations dropped again in August, this time by 5% compared to last year. Britain was the only market where sales rose. Analysts expect car sales will continue to be sluggish.
General Motors is taking on Tesla. The automaker is in the midst of developing a rival to Tesla's electric vehicles. GM says its version will be able to last for 200 miles on a charge and will start at $30,000. However, GM execs say the battery technology is still too expensive and cannot pinpoint when GM will be able to release its car.
Microsoft surprised investors ahead of tomorrow's shareholder meeting. The company is planning a $40 billion stock buyback and raising its quarterly dividend by 22%. That's more than analysts had expected. It's the latest of numerous changes at the software company, including the upcoming departure of CEO Steve Ballmer and the acquisition of Nokia.
In today's cover story, the battle over your right to write a negative review of a business versus the business's right to challenge your critique. Who wins, who loses, and who pays? We check online reviews of restaurants, dentists, car mechanics, everything in the marketplace, it seems. Yelp says reviews on its site grew 41% to more than 42.5 million since a year ago.
Even the slightest ding on a retailer's rating can really hurt them because people are really looking for that 99% positive rating.
But some businesses that have been burned with negative reviews are fighting back, suing the writer for defamation.
I don't know if legal action is maybe a little too harsh. I think maybe an online posting, maybe refuting what the customer said, would be more appropriate.
The Public Participation Project's Evan Miscagni says most of them are meritless lawsuits that some individuals and businesses use as weapons to silence, intimidate, and harass. The organization's website lists several states in red where laws protect consumers from retaliatory lawsuits.
The corporations may have the time and the means and the money to be more litigious and take people to court, but it's going to bring out a whole new level of, we're going to have to look at this legally through a whole new prism. And it's probably going to get messy before it gets cleaner.
But Louis Hickner, who manages Chicago's Lucky Cafe, just wants a chance to make it right.
I would rather control the situation that is in front of me than allow a public forum to let someone write what they think happened.
Some believe businesses can pay to prevent negative reviews from appearing. However, we contacted Yelp, which denied that, saying there is no amount of money a business can pay to manipulate reviews. However, a business may contact a reviewer and subsequently a review may be removed by the person who wrote it.
Paula Deen's extortionist is sentenced to 2 years in prison. Thomas George Pakulis threatened to release what he called true and damning information about Deen unless he received $200,000. He cut a plea deal with prosecutors. Deen has been struggling to reboot her career since she admitted to using a racial slur. The celebrity chef has reportedly lost an estimated $12 million in canceled TV endorsements and book deals.
Habitat for Humanity is urging Americans to go green with their old jeans. The new initiative recycles blue jeans and converts them into an insulation method for new homes. Hayden Panettiere, spokesperson for the campaign, explains the cause.
The average American has 7 pairs of jeans, so we have a lot of denim going around. And Habitat for Humanity takes them and turns it into insulation for your house. So instead of having toxic fiberglass, you've got your recycled denim that doesn't end up in a landfill.
Habitat for Humanity says the denim insulation is 85% cotton, resists mold and mildew, and does not contain volatile chemicals. Find out more at www.bluejeansgogreen.com.
On the economic calendar for today, it's the MBA Mortgage Index, housing starts and building permits for August, along with crude inventories and the FOMC rate decision. On the earnings calendar, Oracle, General Mills, FedEx, and Manchester United. Still to come as Congress prepares to debate the debt limit, why long discussions might not work this time around, plus what will happen if the Federal Reserve takes the training wheels off the economy. And are activist investors taking over Wall Street and Main Street? That's later on. We'll be right back.
Countdown to crisis is underway. The nation reaches its debt limit of $16.69 trillion in mid-October. Treasury Secretary Jack Lew warns Congress not to wait until the last minute to take action because it could have a dire effect if Congress fails to raise the debt ceiling in time. He says if the U.S. can't pay its bills, it'll have a devastating effect to the economy. President Obama, meanwhile, has said he won't negotiate. Republicans want to tie raising the limit to elimination of social programs.
This afternoon, the Federal Reserve is likely to reveal some form of tapering on its bond buying program that's been stimulating the economy. Eric LaSalle, chief economist with RBC Global Asset Management, is on set with us this morning. And will tapering hurt the economy, Eric?
Well, I think it is already hurting the economy. It hasn't started yet, but the markets expected it. You might have noticed interest rates, borrowing costs have already risen in a big way, and so we do see some effects. We see, for instance, mortgage refinancing down 70% from when the taper talk started. So there are some hits. I don't think it's quite enough, though, to derail this recovery. The recovery continues, just not quite as eagerly, as quickly as it has.
Should the Fed do this slowly? Or just all in and move?
Yeah, my preference would have been not to do it at all quite yet, but obviously I'm not running the show here, and so they're keen to go. I think they should go slowly, and quite frankly, it sounds like they will go fairly slowly. They're buying $85 billion of bonds a month. They'll probably chop $10 billion off that, which is a notable number, but still leaves a lot of stimulus out there. That's something that will taper across the full extent of this year and well into next year.
It's just not economists in the U.S. that are concerned about this tapering. People in China are concerned, people in Europe, and some of the emerging markets. How will they be hit by this?
Absolutely. Well, we've already seen borrowing costs go up, not just in the U.S., but indeed around the world. And in emerging markets like China, we've actually seen their borrowing costs go up by more than in the U.S., so the hit is especially profound there. And those countries have been more reliant than they thought on leverage and extra credit that emerged from the U.S., and as a result, they're going to slow, and in fact, they are already slowing. And we've seen some little crises spring up as well in places like India and Indonesia, so they're feeling that also.
Knowing that this is likely to happen, would you change where you would park money?
Well, I think we're right to be fairly cautious in the emerging market investment world right now. So that's somewhere that we're a bit shy on, particularly emerging market bonds. I happen to think the place to be is probably the stock market. The stock market still has some upside. It's still cheap, we think. You avoid the hit that comes from rising bond yields as well. And whether it's the U.S. or other places like Europe or Japan, where those economies are also starting to sink into this recovery, I think there's some pretty exciting prospects.
We'll leave on that note. Thank you, Eric, for stopping by.
My pleasure.
Coming up next, the behind-the-scenes effect activist investors are having on the stock market. And will buy the rumor, sell the news ring true with today's news from the Fed? That's later on in Chart Talk.
Microsoft cuts deal with activist shareholder to avoid fight. Shareholder fights heat up. Activists aim for bigger targets. Those are some of the recent headlines. The annual proxy season has brought them forth. But who are these activists actually fighting for? This question is addressed in an op-ed piece called Offensive Shareholder Activists, Heroes or Villains. It was written by Robert Mayberry. He's an independent global business advisor. And you were leading a forum this Friday on this very topic, a global forum. And what is it that these activists therefore want?
Bill, what they want is financial change. They don't agitate for control of organizations like private equity. What they want is to extract and ensure greater value, financial value, off the balance sheet for the shareholder, and most importantly in the short term for themselves.
And what's happening actually?
Well, we're seeing an interesting change in the platform. Those shareholder activists, mostly the hedge funds, have had success, particularly Mr. Ackman of Pershing Square Capital had a great run at Canadian Pacific Railway, and less so at recently at J.C. Penney. And the reason, in my view, is I have enormous respect for Bill Ackman, but what shareholder activists need to understand is there's a big difference about agitating for financial change and actually bringing about change in these iconic organizations. J.C. Penney would have taken 5 years to bring about meaningful, long-term, sustainable change. I believe Bill and his colleagues underestimated that challenge.
What about the board responsibility?
Well, it begins and ends there, and the reason why we are seeing such a surge in shareholder activism, particularly the offensive shareholder activists, is because leadership teams and management and boards are not necessarily spending enough constructive time with the defensive shareholder activists, the traditional mutual funds and pension funds, who generally agitate with constructive change, for constructive change.
You write also that if there was more communication among and between CEO and the board and the activists, that maybe these problems would be obviated.
Absolutely. We need a mature response to what is becoming a rather kindergarten spat at the old schoolyard. They need to actually converge and understand and agitate for the common good of all the stakeholders.
Robert Mayberry, thank you so much.
My pleasure, Bill.
Bill, in an attempt to avoid a hostile takeover, Safeway has taken on a so-called poison pill plan. The grocery chain, which also owns Dominick stores, became aware that JANA Partners had acquired 6.2% of its outstanding stock. The activist investors say they have strategic alternatives for Safeway. Safeway's defensive plan kicks in if any investor acquires 10% of the company's stock. It would allow the stock to be sold at a significant discount to existing shareholders. Just ahead, more on the market going into today's major announcement from the Fed. We'll be right back. Trader Dan Deming of Stutland Equities joins us now for some chart talk. Good morning, Dan.
Morning, Angie.
They have been buying this market going into the Fed announcement today. What does that tell you?
Well, yeah, certainly right now the expectations in the marketplace are such that the Fed possibly might taper just a little bit, kind of maybe test the waters ever so slightly. But by and large, the expectations in the marketplace, and I think that, the consensus is that as long as that's the case, that the market can continue to go higher here. All
right. So what do you think will happen after the announcement? Is the market more likely to sell off immediately?
Oh, I don't know about that, Angie. I mean, certainly, buy the rumor, sell the news is typical kind of jargon down here on the floor, and it does kind of have a tendency to kind of come to fruition more often than not. I mean, you're seeing the S&P reclaim 1,700. We saw the Russell actually outperform the market yesterday, where we saw the small caps up now at new record highs, trading around that 1066 area. So overall, you're still seeing some pretty good strength across the, basically from the large caps to the small caps. The thing is that there is some serious resistance up there, and And again, the one thing that we like to watch as far as a market leader, the financials have not confirmed this most recent run-up. But by and large, right now, you'd have to be, pretty happy about the fact that the market's been able to kind of maintain these high end of the range as we roll into what could be a shift in Fed policy.
There is some resilience there to this market.
There is right now. You're certainly right, Angie. And like I said, the expectations are that the market's going to be able to handle it. We'll have to see how much of that is priced into the market tomorrow. And I think that's really the key here as we get that announcement. Is the market, like you said, going to sell off on the news or not? I mean, right now, you'd have to say there's a pretty good resistance up above. So unless there's some real momentum underneath there, you're probably going to get a little hesitation.
Good to have you on the show, Dan. Thank you.
Thanks, Angie.
That's a wrap for today. Coming up tomorrow, a new film that gave a shock to the box office. From all of us at First Business, thank you for watching.